So good afternoon, ladies and gentlemen. Welcome to this session. We're going to be talking about climate insurance as a tool to mitigate risks and build resilience through climate action. Today I'm joined by three panelists. Ms. Sinjar Burji, Team Lead, Climate Risk Finance Solutions, United Nations University. Welcome. Ms. Svenja Struminski, Managing Director, Climate and Sustainability at Marsh McLennan. And Ms. Leslie Nudlvu, Chief Executive Officer at ARC. So great to have you here today. In our pre-discussion, we were already talking a bit about the challenges. So I'd like to be very provocative from the start. In my simplistic view, insurance is about risks. And there's a lot of talk about climate risks, but shouldn't we talk about kind of some things which are more or less certain? It's kind of certain that we're having more extreme weather events. It's certain that there's more droughts. It's certain that there are more floods. How does that then match with the need for climate insurance? And is there still a role to play for climate insurance? Svenja, may I start with you and to try and answer that one?
Well, thank you very much. It's a pleasure to be here. Thanks for the invitation. So I've been working in this field for a long, long time, looking at it from different perspectives. And now I work with Marsh McLennan, which is the world's leading risk advisor and broking firm. So I think you're absolutely right. When we frame climate change as a risk, we ignore that it is already a reality. And I think that is really important as a starting point, because we already experience climate change. And there are a lot of things that, we should have done a long time ago, and we're trying to catch up, basically. In some areas, catching up is no longer an option, which is, there are also limits to adaptation, as we see around the world. I think the key question is, what can we do now, and what do we need to do now to actually manage the risks better? And there are risks, because often, when we frame climate impacts, we have a huge degree of information and knowledge, but I think people who are affected by it on the ground, they're exposed to this. They don't know exactly when things happen. They have risks that they need to transfer. So, for example, if you're a farmer, there are certain risks that threaten your livelihood. And climate insurance and some of these parametric solutions that we're going to talk about can help sort of protect that and give you, a stronger sort of financial resilience. The key point with any of this is climate insurance is a part of what we call a holistic approach to risk. So it shouldn't really be the only approach you're taking. And that applies to governments, that applies to industry, that applies to local communities. What really is important is that you start with assessing risks, understanding risk, address them, try and reduce them, and then you can make a decision whether certain elements can be sort of transferred through insurance. But it's that kind of sequencing, I think, that is really important.
Leslie, I know you're doing some great work in this field. I'd really like to get your view about these risks, and maybe you can also tell a bit about what you're doing to address these.
Thank you very much. So thank you very much for the question. So maybe just starting by the critical role that the insurance industry plays. The insurance industry plays, I think, three distinct roles within the economy. The first one is the transfer of risk. And in the case of climate risk, we're talking about the transfer of risk from the most vulnerable communities into the global reinsurance markets. For a risk to be transferred, the risk has to be priced. So there has to be sophisticated understanding of the likelihood of an event and what the payout when the event happens would be. Secondly, insurers are one of the largest institutional investors because the business model of insurers is to collect premiums before they pay out the claims. So as a result of this activity, they accumulate significant pools of capital. And this capital can be then invested towards adaptation and resilience. We already have, and at ARC, we've signed up to the UN Principles for Responsible Investment as an example. There is a Net Zero Asset Owners Alliance, so there are quite a number of organizations that are looking at how insurers can invest in such a way that it's congruent with the overall objectives around building climate resilience and adaptation. And then finally, maybe the most underappreciated role of insurers is on the risk management side. With the data that we collect, we know the flood-prone areas, the drought-prone areas, and this data can then be used as a scientific and objective basis for directing investments, not just at the level of the insurers, but also at the level of governments. Because I think, as has already been said, we cannot insure ourselves out of the problem that we have. If the only solution we have to the increasing frequency and severity of disasters is to increase prices, then we are going to get to a point where the risks are not insurable at all. And to quote Mia Motley, if the economy is uninsurable, then the economy is uninvestable. So the two go hand in hand. Then specifically for us at ARC, we're created by the African Union 10 years ago, and at the moment we provide 85% of all the climate-related insurance coverage on the African continent, insurance against droughts, floods, and tropical cyclones, and we're insuring about 50 million people every single year. 50 million is a big number, but there are 700 million people that need insurance coverage, so there is still a significant protection gap. And what we're working on is really scaling up the solution that we provide. Thank you.
Sinya, I'd like to get your views. You work for the United Nations University. Can you explain a bit what your role there is? What perspective do you take on this?
Thanks. So I work for the Munich Climate Insurance Initiative, which is hosted at the United Nations University. So we're doing think tank work on climate disaster risk financing and insurance, and working with partners to develop and study appropriate insurance solutions, climate risk insurance solutions for the most vulnerable. And so we work with partners currently in different small island development states in the Caribbean and in the Pacific to develop and then make them accessible parametric climate risk finance solutions for farming communities, for fishing communities, for small entrepreneurs. And as Leslie pointed out in Africa, but I mean this is the case worldwide, there's still a huge protection gap, and it's just the reality that these communities face increased climate risks that they have to deal with. And we're doing, for example, also studies in these communities, what their needs are, how they're currently dealing with the effects. And they don't have, their coping mechanisms are to rely on their savings that they have themselves. They have to rely on remittances from outside. Often there's no other solution there than government supported that's also not there. So the advantage of parametric insurance is it provides a channel to quickly direct payments to those who need it. But of course it's not the only solution, but it's something that, and there we work basically on the different aspects, the whole ecosystem with public and private partners to make that happen and to offer it in a sustainable way.
I want to get a bit practical. And I want to make a distinction between the global north and the global south. So first I'll give an example of the global north and then the global south. In the United States, it's now in some areas very difficult to actually get insurance for your home if there's, for instance, a fire risk. These things are starting to happen. How is that going to impact, let's say, home ownership? And what is the role of the insurer there if these homeowners cannot get an insurance at the moment? Svenja, you want to start with an answer?
Yeah, I mean, I think as we see in many places around the world, I usually make the distinction there are places where there is no insurance cover at all, and then there's places where there is insurance cover, but where that is under threat or a challenge. And as you mentioned, the US is one, there are other places. It's basically a question of how do we approach, the challenge of addressing an existing risk. So, people who live there, who often have not enough information or are not aware, or in some cases even made a conscious decision to live along the coast, or who have
usually beautiful along the coast.
Exactly,
That's why people want to live there.
or who actually have no other options, because that's also what we see. There are these kind of often low-income communities that end up being in highly exposed areas. So it's really important to distinguish, which area are we talking about, and how is society addressing this? So I think insurance is a mechanism that helps with quick recovery and gives, the sort of financial certainty that you actually need once you sort of enter a mortgage agreement. So often it's actually the condition for you to become a homeowner. The challenge is if in that sort of context nobody really speaks openly about already the current risks, there is then quite a big sort of surprise or shock factor if something happens and it hasn't really been factored in. As you said, pricing it in, it's often not happening at the point of sale or when you build a house or when you create a house. It happens when the flood or the fire or something bad happens. And then the question, I think, is in order to actually make insurance viable in the long term and affordable in the long term, what we really need is this joint up approach to throw all kinds of adaptation and resilience measures that we have at these communities and help to reduce risk as much as we can, and then have insurance as the sort of financial mechanism that helps with still the unexpected risk. So I usually explain it, let's do all we can to deal with, the lower level risks, and you try and do. There are lots of things that communities actually are doing, and that's the way forward. But I think what we also need to make sure is that while we're trying to deal with current risks, we're not creating new risks somewhere else. And I just mentioned building codes. It's a scandal, I think, in terms of how in many places around the world climate risks are really not factored in. So we're happily creating new communities.
Building
codes and
address
planning.
More or less the changed situation.
Yeah, and
so
planning regulations.
You shouldn't be building in flood-prone areas.
Yeah.
You shouldn't be building in areas where there's a risk of fires.
Well, or you need to at least consider it and then make certain requirements to build in a more resilient way. That should really be the baseline, the starting point.
So that's very clear when it comes to Global North. You said there's areas where there's already insurance. When we think about the Global South, there are hundreds of millions, several billion people that have no insurance at all. And now there's this increase of climate risk. If there's no insurance now, aren't we unrealistic to expect that we're going to have climate insurance there in these areas? I don't know who takes an answer. Leslie?
So I think building on what my colleague has so eloquently said, the intervention needs to be at multiple levels. There isn't going to be a single solution that addresses all the aspects of the issue. So if you think about at the national level, the impact of climate change needs to be taken into account in the national policy framework, right? And by this, it will include very stringent adaptation measures. In the case of drought risk, which is one of the most prevalent risks on the African continent, it includes drought-resistant seeds, it includes infrastructure, and as you can already see, all of this goes beyond the terms of an insurance contract, so it has to be, I think, massive investment at the national level. At the moment, it's estimated that only 5% of all climate financing is going towards adaptation, so that number needs to significantly increase. And then, of course, we can look at interventions at the community level as well, right? Then this would include, building of seawalls, taking into account the increased risk of flooding when in the construction of buildings. But it has to be necessarily an all of the above approach to address the risk. And again, right, even though I'm from the insurance industry, I see the limitations of insurance is not just an insurance problem. It requires a much wider lens to effectively deal with it. I think where insurance is helpful is on pricing and understanding the risk, because then if the insurance premiums are too high, it simply means then that the risk is too high, and then additional measures have to be taken to bring down the level of risk. So insurance plays a critical role on the market signaling part. And while, of course, it will lead to short-term unhappiness when people are unable to buy their dream home along the coast, but not being able to find insurance should then be a moment of reckoning in terms of addressing the problem more holistically. Thank you.
I've seen that there's always these lovely maps of the globe that show flood risk, drought risk, fire risk, etc. And typically these maps are on sometimes even a resolution of 10 by 10 square kilometers. Can't the insurance industry use that and to make very specific with these risks, this is what the insurance premium would need to be in each of these squares or communities, and then discuss that with government, say this is the problem, because it will then suddenly become clear that the insurance premium in many areas of the world is just so high that you need to take other measures. Sinya, what would you say to that?
Some of that data is already, I mean, this is the data that is being used, right?
The data is being used, but do governments know? Do they see it?
Not all of them, but I think then it's a very specific case to develop, for example, this insurance for this community, which perils are included. There's definitely a data, we need more data, we need more specific data, we need reliable data. But then the question you were asking.
But if we translate that risk into very specific, this is what it means for insurance, then you're putting a value to it. And I think when governments see what actually the cost is then to insure things, maybe more action will be taken. Or am I now
they will take, yeah, that is an important signal. But I think what was discussed earlier, insurance is not the first starting point, right? So, but if it's used as a signal to see this would be the price for an insurance, but this can be brought down, the risk, by taking certain risk reduction measures, by making the right, doing the regulatory framework that has the right building codes, incentivizing, that infrastructure is adapted, then that is the good case. But it shouldn't be the way, this is the premium, this is the insurance, and then no other action is taken. But I think
Svenja, you seem anxious to answer.
No, I think it's important to say, look, there is risk data, and I think we have come a long way of making also that data available, and there are good tools. But the communication of what that data actually means is often not very good, and I think that's something to take on board. And then, but it shouldn't stop there, because once you see the data, what is your conclusion then? So the conclusion, should not be, well, yeah, let's try and seek insurance. No, the conclusion should be, how can we manage? What are the options? What are the pathways? How can we reduce the risk? And then how? And insurers are helping with that. And that's actually, there are really powerful stories. And I think also the ARC story is kind of built around that. Is that the risk transfer element is one, but what you do with your total cost of risk is the other story. I think.
Can you give one of those examples of where that's really happening? Where these, you mentioned powerful stories, where then I expect something's changing.
Yeah, I mean, there are examples where this is happening at government level. So we have these sovereign risk transfer solutions, and I think ARC is actually a good example where there has been a lot of effort on establishing the risk and sharing the risk, and it is sort of with a view on informing governments. I'll give you another example, is at the local level. So we are doing a lot of work with local communities. We have a concept called community-based catastrophe insurance, and it uses parametric cover, but it's really built around that notion of it needs to be community owned. The community needs to use the data to establish in what types of resilience they want to invest. And then the insurance element sort of sits as a part of that, but it's really sort of built around the notion of resilience and building resilience. And we're doing this in the US with communities, and I think that is actually a really good entry point because that's where the risks are felt. And often it's local authorities who are having to deal with that, with the cost of, after an event, with the rebuilding cost. And maybe the last point on the rebuilding, this is something very close to my heart. When we look at the dramatic events that are happening, we've seen this basically around the world. We've seen this in Spain. You just switch on television, you see a lot of dramatic events. I think what happens after is a really important point. Obviously, we want to prevent a lot of these events, but I think where we are with climate, we really need to get better in how we respond and address. And not just in terms of speed, but also in what lessons we learn. And far too often, there is not that what we would call building back better or resilience sort of built into the system.
The feedback loop is missing.
Yeah, and it is, unfortunately, that's the point where you have influence over, is something going to be built back in a resilient way or in a sustainable and carbon neutral? I mean, we haven't even talked about the transition because there's a big piece in this as well on the transition side. I think that kind of mindset, and that's where I think insurance also needs to, embrace this as part of its business model. That actually the payouts are being used to build resilience.
Yeah, Leslie, you go first before I'll ask a follow-up question.
Yeah, if you don't mind contributing to the very rich discussion. So I agree with everything that has been said, but maybe just to add some perspective from the African context. Right now, the insurance penetration rate in most parts of Africa is less than 2%. Compared to an international average of around 10%. So the insurance industry itself is quite small when you look at then the value of in the aftermath of a disaster, what the insured losses are. It's a very small percentage of the overall size of the losses. So a huge chunk of the assets are not being insured in the first place. So of course, then your ability to push the signal via insurance is limited because you miss out a big part of the market. However, at ARC, what we have been doing, I think, is exactly what you suggest in terms of clearly linking the cost of insurance to the level of risk in the country. And if you allow me just to spend maybe a little bit more time just to break it down. In the insurance industry, the way we assess risk is a function of the hazard, the exposure to the hazard, and the vulnerability, right? So if you think about the hazard, in our case at ARC, we cover droughts, floods, tropical cyclones. And with climate-related risks, your exposure tends to be a function of your longitude and your latitude. If your country is in a tropical cyclone alley, there really isn't much that you can do about that. But what you can change is the vulnerability, because the vulnerability can be reduced by targeted investments into adaptation.
Those targeted investments, in my simplistic view, that's not the realm of the insurer. That's the realm of, let's say, the asset owner. They need to make the investment so that they're less prone to the hazard.
Correct. And this is then where you link then the insurance data with the national level policy planning, right? Because as insurers, we already know that that particular area is vulnerable to climate risks. So the first step is then to make this information available to the asset owners so that they are also aware of the level of risk, because they are not always aware. And then after that, then link this also to the investment in adaptation. So for example, in a city like Maputo in Mozambique, it will be building a seawall along the most vulnerable communities, such that when the tropical cyclone happens, then it causes significantly less damage. So this is for us the way to influence the discussion, is in addition to just the insurance pricing.
So can I more or less conclude there that the entire climate change is actually going to greatly increase the business of insurance? There's a massive growth potential. You already mentioned there's some areas where the amount of the number of assets that are insured are much lower. Sinja, you want to take this? Is this a growth opportunity for the sector?
I think many insurance, the risks are there, so it's not growing, and I think insurers are also...
The risks are there, but the risks are getting greater, and maybe the need to have insurance becomes greater. Or no?
The need for protection is there, and to build the resilience, definitely. You want to...
I wanted to come in just to say there are in fact two opposing forces, right? As you invest in adaptation and you reduce the vulnerability, that also lowers your insurance premiums. So you've got, on the one hand, increasing premiums as a result of increasing frequency and severity, but you also have decreasing premiums as a result of investments into adaptation. In Africa, we expect the market to grow simply because right now the percentage of the uninsured is quite small, and that's going to grow. But in terms of the overall size of the industry, we don't expect it to grow, because for us as the insurance industry, the more risk you underwrite, also the greater the size of the claims that you'll pay out. So you also have to keep this in balance. Thank you.
And then maybe just to say, in the markets that we work on, there the offer is not yet there. So there, as Leslie said, the market will grow. So for example, we work with local insurance companies to offer products in those markets. And then for them, looking at climate risk insurance is new, looking at parametric insurance is new. So there's definitely work that we're involved in also building the capacities of the local insurance industry to come in at different levels, right? The risk pools provide insurance at sovereign level, but we really need protection and support at all the levels. Also for organizations, for microfinance institutions, for financial institutions, and then for the individual communities. And to offer it locally, there is still a lot of potential that needs to be grown.
Yeah, I mean, right now there is a lot of capacity in the insurance sector and also a lot of appetite to develop these new solutions. And often it's also a demand side issue, because I think, from my own experience, it is actually quite hard to bring insurance solutions into a market that has no experience with it, to work with governments who've never really had any experience working with insurance. So, I think there is, and when we look at what we call the protection gap, I mean, there is a massive potential to address that and to bring the benefits of insurance to it. But, and this is the big but, we also can't assume that insurance is always going to be there and it's not the way out of the climate crisis. I mean, that should be obvious to anybody. Nevertheless, the industry is also very committed to then support the transition side. I mean, insurance plays a huge role in making investments in renewables and in new technologies viable. And I think this is also a really important part of the discussion. I think the key message is there are limits to insurability. And I think, there was a famous saying, I don't know, it was like the AXA CEO, AXA, an insurance company, a couple of years ago said, in a 3.5 degree world, don't even think about insurance. That's the least of your worries. And, whether it's 3.5 or what the number is, I think what really needs to be clear is the availability and the benefits of insurance, are there to help with the unexpected shocks and events. So if we're sort of moving into, that really sort of high risk world, it really becomes a societal question, and there will be a much bigger focus on working with governments on this rather than having the existing insurance mechanisms. But at the moment we do all we can to obviously prevent that from happening, and I think there is a tremendous opportunity, and a lot of insurers are actively investing in this space, but it needs to be done with that notion of reducing the risks and then making insurance viable, basically.
You talked about we're moving into a high-risk world, and risk is always a function of chance and impact. It seems that the chance is greatly increasing. We know that because of climate change and warming, chance of severe events is increasing. Impact, you mentioned several things about building better, having better codes, etc. But it's more or less certain that the risks increase. So what is it then, and I'd like to ask each of you, the governments are negotiating here next door. If you're in their spot, what would you do? What would you do as a government when it comes to the insurance industry, and especially then the focus on climate?
So then I go back to what I said in the beginning on the three critical roles of the insurance industry. So we've talked then about the pricing of the risk, and I really like the idea that you have that maybe explicitly showing the cost of insurance by grid square would really help to focus the mind and maybe move it from a conceptual discussion to a real discussion. Then on the investment side, if you're an insurer that's worried about the impact of climate change, then it doesn't make sense at this stage to be investing more in fossil fuels. I mean, you need to be investing as well in terms of supporting the energy transition, supporting the move to more renewables, and the overall efforts in terms of reducing carbon emissions. Then on the risk management aspects, again, as we have mentioned, insurers have a wealth of data in terms of, as you've just said, the probability of loss and the size of the loss when an event happens. And there should be much stronger linkages between this data and how the investments and in adaptation are then channeled at the level of government. Then that way we form then this virtuous cycle between investing in adaptation to reduce the vulnerability, translating into much lower premiums, and of course when the premiums are much lower, then it acts as an incentive for people to take up insurance. Sinja was mentioning earlier on, right, that there is a huge protection gap that exists in the market. Part of the reason of this production gap is actually related to the high cost of insurance. So the way to make more people insured and to reduce the production gap also comes back to the same question around investment in adaptation to reduce then the vulnerability. Thank you.
Thanks. I would want to add that, countries have a huge responsibility also in helping protect their citizens from climate risks. So things to look at are awareness raising and financial literacy. So if we specifically look at the most vulnerable communities, and you mentioned it earlier, often they don't have insurance yet. Insurance, if we go to them, is the first contact point they have with the formal financial system. So there's a huge need still for creating demand, just telling them what is possible and what not, where insurance can help. So in general, awareness raising and capacity building is needed, and I think their governments play a central role. And then building the ecosystem and the enabling environment that private sector can offer it, and that the insurers also make it accessible for the most vulnerable communities. So in some of the countries we work on, there's no microinsurance regulation. There's no regulation there. Regulation is done in different bodies in different countries. So thinking through, I think, state level, how do we protect these communities? How can insurance can come in? And then really building the ecosystem and the incentives to do so. That would be the demands.
Well, I mean, I think overall the direction of travel is quite clear. You know, we all need to do as much as we can to achieve the, you know, sort of journey towards a decarbonized world. That's really, you know, that should be really at the forefront.
That's the cheapest form of insurance, just preventing.
Well, that's if we would have done this earlier, we wouldn't have these conversations. I mean, it's as simple as that. But given that we already have these impacts baked into the system, there's just no question that we need to invest in adaptation and resilience and to protect people. And I think, you know, the question is also how can we adjust existing? I mentioned building codes and planning permissions as one example. We also do not really have good resilience standards, so it's actually really hard also for the private sector to sort of determine, okay, well, what should be my standard? What should I invest to? So what is a resilient, you know, factory, or what does a resilient country look like? This is kind of a bit with the transition to net zero, we have clear targets. With adaptation, it's much more diffuse to actually define what actually well adapted looks like. So in the UK, we're currently, I work with the Committee on Climate Change there, and we're currently setting out what is actually a well-adapted UK going to look like. And I think that's a powerful tool to then establish also some certainty for the private sector to come and invest in this and to come and adjust their ways of operation, similarly to what we have when we have a roadway to net zero. And I think that could be very powerful, and I hope that we achieve here some more clarity on what actually resilience and adaptation pathways look like.
All these things sound quite mundane, and we know what to do. And typically those are the best things that we can do. Are there also some radical, innovative things that should be done, or is it, first of all, just getting the basics correct? Leslie?
So on my side, I will say that as the African Risk Capacity, we've been in business for the past 10 years. So what we are doing can no longer be considered as a pilot. We know that what we are doing works. We have 39 countries that now participate in the ARC program. We have paid over $230 million in claims. So for us, the first step is really significantly scaling up the risk pools. This will make insurance more accessible, more available, and more affordable to the people that really need it. And then once that is done, then we link this, as I was indicating earlier, with strong investments in adaptation. The roadmap is already laid out, and I'm hoping that at this COP we move from just constant talk about finance to actually, unleashing our financing. Maybe just also to give a personal anecdote, right? We all agree that the climate change is an emergency, but the way we are dealing with this emergency is different from the way we will deal with any other emergency. And I'll say that it's time for us to focus on action. Thank you.
I think governments, when we had the COVID crisis, showed how to deal with a big emergency. And this emergency might be even bigger.
So I think scaling up is very important, what Leslie said. Insurance has been around, insurance is there. Also on innovative financing solutions, a lot has been piloted, but now it's about how do we scale it up to look at that. And I think what can be done innovatively is communication and very much look at the details of what have we learned from those. Also what hasn't worked and why, and then to address these points. But I think the coordination between private and public stakeholders is important. Communication.
Good. Well, thank you very much. Svenja, any last comments? Our time's more or less up, so.
I mean, I think people often forget that technology, as I just dropped my phone there, technology plays obviously a massive role in this. And I think, I like to believe that we actually have already seeing a massive amount of innovation in terms of use of technology, also needs to be managed carefully, but with huge advantages also in, vulnerable communities. And I think the key is to not forget that there are, there is a way forward, but we need to do this kind of in a smart way. And, we often sort of look at the trade-offs, but we don't look at co-benefits. And I think this is a really important part. So when we talk about the example of insurance, I always say, well, think about the impact it has on communities, the social element, if you design it. Think about the economic benefits it has, and then think about also the environmental benefits. Are there co-benefits? And when we talk, we haven't even mentioned nature, the role of nature. So for a lot of these adaptation elements, nature can also be a really important ingredient, if you like. So I think that kind of mindset seems to be starting to change, this sort of holistic approach. And yeah, I mean, look, let's end on an optimistic note. Sometimes it's hard, but I think, there is huge potential. And I think a lot what we see here today is sort of testing out, trying out things. But what we need is this big sort of jump to make that the new normal, rather than, as you said, we shouldn't be a pilot anymore. No, it should be the way to do things.
Thank you for closing with that positive note. I think communication is one of those very crucial areas where still some things can be done. Thank you, Leslie, Xenia, Svenja. Thanks so much.
Thank you. Leave those here.
Ready? Yeah.